Writing an angel check is easy. Knowing why is the flex. Angel investing. Underused, misunderstood, explained badly. Angels Decoded, an educated and raw take. In cahoots with Play Money. So I'm a gut decision maker, but on one deal about 18 months ago, my gut wasn't giving me a clear signal, so I borrowed someone else's conviction instead. Fast forward, I am pretty sure the company I invested in is going to be eaten alive by AI.
It's a challenge that any investor would face right now because we've transitioned from AI being a technology that's opened up categories and new businesses to being almost standard. And if you're not integrating AI, you're behind the pack. And there's some examples, of course, that would stand outside of that. But if you're thinking about a framework today, where do you even begin to think about what's real today and what tomorrow looks like? Because you're making a decision based around the company and their chance of success and the founder. There's so many things that we've talked about on previous episodes. But from an AI evolution, how do you build a framework to even rationalize, will they get eaten? Will they succeed? Will they get acquired?
So I think you actually have to even take a step back from that and realize in the past, we could, as angels, we could take signals from the quote unquote experts, right? The funds, the people studying the space. And that's what I actually did on this one deal that I'm talking about. It was a no-code website builder, which now makes me like cringe inside. Even thinking about it, I thought this was a good idea. But it was a later stage deal. And I wanted some later stage exposure in my portfolio. It was fast growing. They were, they were profitable on the drop of a dime. They had a clear exit path. And so it was a bigger check than usual too. And I got access to the deal through an angel group that wrote checks alongside a fund I really respect. And because I wanted the late stage deal, I'm like, hey, they're doubling down on this. This is one of their biggest positions. I'll go invest alongside them. And so that signal that in the past, maybe I could have trusted a really knowledgeable fund that lives and breathes in the space is doubling down on this. That's not a signal you can trust anymore. And it wasn't just on this deal. I think it's industry wide. The professional investors are drinking from the fire hose just like we are as angels. We're almost on the same level playing field at this point. So the old conviction points of the past they're not doing the job they used to do.
Okay, so let's step through this in a couple of ways. So the first step I want to look at is you called out there of taking the lead from a traditional VC fund who is investing that is basically spread across a balance, and they know the numbers that go into 100 bets, 95 go nowhere, 5 of those bets pay back the fund. Simple math around that. If you're taking signal from them, it's easy to take strength from the 95 that they put money into, assuming that because they've been successful previously, that one is going to be successful too. So already that signal you're getting from a traditional fund is already skewed, right? You're actually not getting strong information.
Well, I wouldn't say that. I mean, when you get a fund that's doubling down or tripling down on an earlier bet, I mean, they've seen consistent traction over time. So I don't think that's a poor way to make a decision. I think it's become a challenging way to make a decision in the space where everything right now is an AI deal. You have to look at every deal through the lens of AI.
You're right. If they're doubling down on something they've already invested in, they have visibility, they have history with the founder, they have insights from a category perspective, by intelligence that you don't need to think about. So there's definitely opportunity in that part. But from a bias perspective, I'm curious because that is a specific example at a later stage that you called out. Let's float it back to an earlier stage. And let's take that as our next step.
Yeah.
Like from a signal perspective, we've covered in previous episodes around the founder and the product. Mm-hmm. But I'd like to double down on the category of AI. And for me, it's become ubiquitous in the way that it shows up across categories.
Yes.
So from an assessment perspective, AI is not the advantage anymore. It's the default.
I don't know if I would say it's not an advantage. It is a reality, like the air we breathe. How does your company and the founder alongside it exist in that world, and what do they do with it? And that's a different question. And I think because it's been moving so fast, and I've been around a minute. So I was around when the internet was new. So I've seen things people thought were moving fast before, and sister, they were not moving fast back then. It was like we could have sent memos to each other and just, showed up at the office on a Monday. It's moving fast now. And what I think I learned from this experience is I don't know if I had built my own conviction first, if I would have gotten the answer right. I probably wouldn't have, but it would feel a lot different now. I feel like, oh, yikes, that investment just went away. And it was a later stage investment. It just went away because I outsourced to someone else. I should have had my own independent framework for thinking about this kind of deal. And admittedly, 18 months ago, I don't think we all thought AI was going to subsume everything. But now I think it's irresponsible to be investing without some sense of what to look at. And that doesn't mean you need to know everything or understand where AI is going. I think it's much simpler than that.
Interesting. I want to unpack that a little bit, but you talked about going back in time. Do you think that you could look at the dot-com boom as a reference point in history as far as what we're going through now? Companies that were 12 months old were getting insane amounts of investment because there was an opportunity to capitalize on new technology at that point, and then it hit a cliff and imploded as far as there were too many businesses trying to do the same thing. Do you think there's a little bit of history repeating itself, or do you see it differently?
I see it. It's really different now. Really different now. When the dot-com boom hit a cliff, the internet was a fraction of the size it is today. We had a little bubble moment, and then we kept growing after that. And I would say the internet didn't replace any businesses. It made them better, and it created new businesses. What's going on with AI is a little bit different, and I'm not going to try to be a market predictor. No one needs to be a market predictor on this to be an angel investor. We're very clearly seeing you don't need to be a market predictor to be a professional investor in this space. But I think we each owe it to ourselves to be able to keep deploying capital right now, to have our own framework of how we look at every deal through the lens of AI. And deploying capital right now is a great idea because great new changes are happening. I'm watching what AI is doing to my business, and don't get me offline. I'm giddy about it. I will talk your ears off about what we've learned in the last 6 weeks and what we're doing with it. So it's a great accelerator, but we all need to develop a different kind of framework for it, or a specific framework for it, because we can't ignore it.
I 100% agree. So going back then to the previous comment that you made about not having to be an AI expert to be able to invest in that stage. If you're an accredited investor and you want to invest as an angel and you're looking at a portfolio play, and AI is going to be most likely heavily represented in that, not necessarily, but right now, today, that's going to be the case. You talked about a framework. How do you start to think about assessing that business where you're not an AI expert? Because for me, there's tension in that decision.
Yep. No, there absolutely is tension in that. And this is a place we've been doing a lot of digging and talking and interviewing and reading, because we sit at a point in, we do a level of deal selection for people on the platform. So we need to go in with a point of view, or a point of view of who we're trusting for their points of views. And I have a point of view because I sit within my own business. I'm fundraising right now for Play Money. And trust me, AI is the question. And so for me, how I have broken it down, taking all that expert advice in, is look at the business. And is what they're doing something that you can now look at AI and say, Claude could just do this in 6 months or a year or 3 weeks? Businesses that have that characteristic to them are going to have things that, if it can just do that, then maybe you want to stand back, right? Clearly, website builder. AI writes code. Code is a set of rules. Yeah, you can imagine a website builder would happen. What's more interesting are businesses that are generating their own data that the core AI model just couldn't know. Information about your preferences, or information from clinical records that are proprietary, or private bank account information because you're a fintech, or Do you as the company sit on a pool of information that the core model won't know, or are you generating net new information that drives decisions and more transaction that the model itself could ever know? And that's sort of become the two pieces of my framework when looking at deals now. What are they generating on their own that the model can't know?
It's a really interesting point. I just recorded an episode on Startups Decoded, my other podcast, with a gentleman, Vanya, and he's got a company called Kumo, and his business is all around predicting the future. And what they're looking at is proprietary data. And simple example, you're at a hospital, they input all of your information and they'll make a decision about whether they can let you go today or whether you need to stay for 7 days, and making informed decisions based upon symptoms, research, and that pulls in a lot of proprietary data. And it's information that only they have. And you have that kind of like functional decision making, but it can also impact on sales cycles and retention rates and churn. And there's ways that practically you think about, okay, yeah, I can forecast things in the future based off patterns. But the part for me that's interesting in that is the proprietary data that you called out there as well, because sitting on first-party data not only allows you to have ownership within a certain category, it also increases valuation. I was reading a report the other day around company valuations, and it's not just the actual business they're creating and how they make money. It's actually the data that they own as well, because that as an asset is so powerful to drive valuations up, because competitors or some of the huge global corporations want access to that to be able to compete on the same terms.
You can see that. And it's not, but I think it's important to point out the finer point there. It's not static data. It has to be continually increasing and evolving data. And if that data actually is evolving because of the actions being taken in the product or the company or the platform, that's even better. And I love that framework because each of us, as just like a layperson, can make that assessment. The basic understanding of the business will give you that assessment, which is super powerful, because all of a sudden it gives you a way to continue investing in now and continue investing when everything is changing and there's going to be a lot of great big winners, but without having to be a fortune teller or an expert. And that's super powerful. It gives you permission to do so many things.
So to give ourselves a reference point as far as a framework, we set this up in the sense of not leaning on peers for feedback. In the noise of making a decision, you could get on ChatGPT, you could do some research yourself, you could talk to peers. There's lots of different ways to do that. How do you start to think about true signal versus noise in your own personal framework for angel investing?
I think that hasn't changed at all. Signal versus noise still goes back to my gut. And gut is not a vibey thing. Gut is the millions of data points I've collected about businesses and problems and living life and people, all of those data points I've collected over many, many, many years. So I think at the end of the day, I mean, just like when you're using AI, it's your judgment that makes AI useful or not useful, not listening to what it tells you. So that same judgment and that same gut applies. And that was almost what was, encouraging about this decision I may have made wrong, is I didn't my wrongness in my decision was because I completely abdicated my decision-making to someone else. I didn't let my gut really engage. I engaged it superficially. I trust them. And maybe that was still the right decision to make, even if it doesn't turn out right. It just feels wrong because I abdicated a little bit too much.
And I would almost put a definition on gut, because gut as a term, if you think about it from a practical standpoint, is based around instincts, and instincts are informed by learned lessons that you've had yourself. So what's your life experience? What have you read? What have people said to you? So it's almost like a melting pot of information, and to lean too heavily on one is a mistake. A collection of information is critical. So being well-rounded to a point where you trust yourself based upon your own intelligence, experience, education, combined into one decision-making process still stays true.
Absolutely. And in fact, I would take it one step farther now. And right now, your gut and your judgment and your taste are more important than ever. And back to our framework, that's something the model can't take from you.
Such good advice. Well, Cheryl, Kellond, we are at time in our 15 minutes of power. This has been such a healthy look at the state today from investing in AI companies. My name is Andy Walsh from Startups Decoded. My mate Sheza over there on the other side. You're listening to Angels Decoded.
Angels Decoded, a weekly podcast for people learning the craft. Angel investing made easy. Subscribe, then decide. Angels Decoded, in cahoots with Play Money.